allow for this panel, we have 5 speakers, and I think that it's one of the most critical panels at the KIEF Economic Forum. And economic development is certainly very intimately connected with instruments that are used to achieve economic growth. There's this broad understanding that the market is overheated, the capital market, but at the same time, Ukrainian businesses are underfinanced, where money is expensive. There is a capital market. We had a meeting at the Ukrainian SEC, and actually, infrastructure-wise, it was concluded that a capital market does exist in Ukraine. But we are going to talk about some of the constraints holding back growth, about instruments that will enable businesses to raise capital. We will speak about the role of the regulators and experiences gained by companies as they've attempted to raise capital. And let me introduce Kyrylo Shevchenko, governor of the National Bank of Ukraine. Kyrylo has over 27 years worth of banking experience prior to taking over central bank. He worked at 4 or 5 commercial banks, and according to market participants, he's widely believed as one of the most competent bankers who has a very intimate understanding of the banking sector from both perspective of commercial banks and central banks. Now, Ruslan Magomedov is commissioner of the National Securities and Exchange Commission. He held several prominent roles over the years, including his post at the State Property Fund, and his team is committed to promoting capital market development jointly with USAID funded project and to create new market opportunities. But it's important also for us to try and make sense of yesterday's meeting with business representatives. I'm also happy to welcome Sergey Butkin, who's actually traveled all the way from Australia to attend this panel. Sergey brings to the table a wealth of experience in banking, and he's a managing partner at FitPoint, and he sits on several boards of directors. He has a lot of experience in structuring investment deals, mergers and acquisitions, and debt restructurings. And Sergey has unique international experience, which it's not something we can see from as far as Ukraine, and we very much look forward to a piece of his wisdom on what needs to be done for Ukraine to improve its competitive position. Sergey Pozniak is the founder and owner of a large non-banking financial group, which essentially credits businesses a competitor to banks. Up to 50% of lending operations in Europe is picked up by non-banking financial institutions. In Ukraine, it only claims a 1% share. And how is it going to compete with banks? And Timur Turlov, joining us online, he is in Kazakhstan now, and he had meetings at the Kazakh Central Bank. He is the founder and chief executive officer of Freedom Holding Corporation, Freedom Finance Corporation. It's this company has gone public on the New York Stock Exchange. Its market cap is some $4 billion. His experience will be very valuable in comparing this market with other markets, and in terms of charting the way forward for Ukraine, what will make for creating Ukraine as an investment opportunity, and with his recent experience of going public. And I would very much like to learn his views about the prospects of Ukrainian future IPOs, both in Ukraine and in foreign markets. And those are our distinguished panelists, and we begin by looking at the first question, and I'm going to address the first one to everyone on the panel, and then maybe I will have time to follow up by asking a number of specific questions. The first question is about capital markets and what are some of the constraints. if you could just try and diagnose today's situation in terms of our prospects going forward. Thank you. But I would like to begin by welcoming everyone in attendance. It gives me great pleasure to be attending, and I'm happy to see so many familiar faces, my professional colleagues. And in terms of diagnosing the situation, I would like to begin by stating that the domestic investor, private individuals, have only two investment paths. One is to place a deposit at a bank. That is the most, okay, 2.5 paths, okay. The second path is to buy property, residential, non-residential. And this point 5 is, instead of placing a deposit with the bank, they can buy treasury bills. And that is pretty much it in terms of choice of investment instruments for the domestic investor. Our job is, in large part, is to expand this range of opportunities and implement new and attractive instruments in Ukraine. Ruslan, thank you. As the governor quite correctly expressed, indeed we have 2.5 paths or investment opportunities, and even that remaining half is not an easy one. There are two issues with our domestic stock market. It's that it is not easily accessible. It's, be it a Ukrainian national or a foreigner, whether a private individual or a corporate entity, in order to gain access to the domestic stock market, they have to take several steps, and they do not see much point in pursuing this path in many situations. So if we were to compare the buying of treasuries to opening a deposit, you can open a deposit remotely, but unfortunately, in order to open an account in Securities and buy treasuries, that is not available online. As a regulator, we see this as a development opportunity. What we can do, we could simplify access to the market through digitization, to enable the remote opening of accounts and to enable market participants to transact business online. Now, we should also facilitate access for issuers, and it's an IPO that it was one and small one. It was the football club Veres. It was pretty small, but what it showed, that it is possible, and it is opening up this opportunity for others. And many are asking me, how would we become a stock issuer? So many are now running into constraints around taxation. A question to the audience: who of you, as entrepreneurs, would like to raise 50 million hryvnias from the domestic stock market? Yeah, the amount may not be large enough to appeal to people. Now, we have this as a positive, as a success story in this market. Those of you who have raised a hand, please try and answer the question: are you prepared to completely revamp your ownership structure, your corporate landscape, and bear the full tax load that you liable to bearing? So it's when look, wait a minute, but we are going to pay so much in tax that it makes no sense even to stay in business, let alone pursue an IPO. But that really does not depend on us as Securities, as the Securities Commission. It depends on how business is liberalized, because there are tax privileges for anyone buying treasuries, and they are entitled to a zero tax rate. But if a corporate entity were to go public, they would have to cover those negative tax consequences, let alone bearing the risk premiums. That actually is acted as a barrier to seeing a large number of issuers showing up to IPO their companies. But to those of you who raise their hands, I, as Commissioner of the Securities Commission, I am ready to go down this path with you. And if we to run your IPOs as a pilot, and I will help you become Ukraine's second, third, and fourth IPOs in Ukraine. Yes, just to summarize, it's quite tricky. There are concerns, there are tax implications, and there's competition on the part of the government in terms of on the terms. Now, yeah, it's hard to to raise liquidity. It's hard to become an issue. Now we are getting digressed, and just to try and summarize, Sergey, an outside look. What has been constraining growth, and what is your diagnosis to the market? Look, the market is always made up of two sides: investors and those who need capital. Investors, just as the governor quite correctly pointed out, they have very little in the way of options. But those that need capital have even fewer options. Now, traditionally, in the whole world, and it's outside this country, and I see so many people who are so much smarter than myself, but people finance business growth using either debt, capital markets, or equity instruments. Okay, our debt market is more or less sort of operational, but it is mostly driven by sovereign debt and quasi-sovereign borrowers, those national corporations, and this market of corporate debt is slowly but steadily developing. Our equity market is close to non-existent, and in order to launch it, the government needs to adopt a very firm stance and play a very prominent role, but not to create a new infrastructure. There is enough infrastructure, but to create a tradable instrument, help create tradable instruments. And the government holds quite considerable assets, which I'm going to talk about in a minute or two. But in order to launch an equity market, the government's step is the first one, and in particular in designating instruments to be traded. But it's the government that needs to create an environment for a liquid market, where broadly accessible, one that would appeal to multitudes of securities investments to be issued. Well, by way of clarification, when you refer to the government or the state, which specific institutions or people? Yeah, I was actually thinking how who it was I was lacking, and I thought that it's actually I would give up my seat to the State Property Fund, the state as represented by the State Property Fund. This is an organization that manages assets on behalf of the government, and it has the mandate, and it is supposed to play a very active role in launching an equity market and coming up with tradable instruments. Okay, Sergey Poznik. In terms of diagnosing the market, so it's when you're diagnosing something, you need to look at all from all sides, and then one is that it's good, it's cool that we're having this discussion in the first place. I've taken part in panel discussions to discuss capital market development, and Sergey and I have been on various panels, and it's good that we are making progress. It's good that we have a market infrastructure for the capital market. Whether efficient or not is a different matter, but we have legislation, we have banks, such as UKA Gas Bank, who's underwritten securities issues. They are helping market participants. They are responsive to what the market demands. But there are certain constraints, there are barriers. Now, in terms of the infrastructure not being very efficient, but there are some provisions in the law that are quite strange, like mutual investment institutes, like high entry barriers. It's actually acting as a check on people willing to put money from under their mattresses and injecting it back into the economy. It's some 90 billion as estimate. It's now obsolete legislation. It was adopted some 20 years ago in securities legislation. Now there are 3 bills currently being discussed: insurance companies, credit unions, and which would enable the non-banking financial sector to really get a piece of the action. And in this, but it's good that it is part of opinion number 6 of the national economic strategy. But there's another barrier, that because there was this move to adopt legislation quickly, but now it seemed to have ground to a halt. Now, stock market instruments may not be efficient, but like I deliver lectures at the KIEF Magomedov Business School on investment funds, and I feel frustrated when I have to comment on those investment paths, and you actually name two and a half paths, but you do not even mention securities investment. Yeah, statistically 95% is treasuries. No, it's not even 95%. It's even higher than that, and it's 0.1 to 0.5% of total trading volume is investment in equities, something that ends up in the real economy. Everything else is treasuries. This is a diagnosis, and at the end of the day, businesses are not being financed. How are businesses supposed to compete with foreign companies with ample access to finance? The only way to compete is, unless they have access to finance, they should create very simple processes without deep processing, and the fact that such a dormant securities market eventually forces Ukrainian businesses to continue pursuing business only in inputs and industries, and that's the only. We need to actually promote securities markets in order to shed this role, and we have people who have it within their power to do all they can to promote capital markets. Now we have Timur, who is on the call online. Sorry, I almost forgot to invite you to speak. Now, you're not in Ukraine, but you're working with clients from Ukraine. We are talking about Ukrainian capital markets. What is your diagnosis about if there is a market? So the market is made up of building blocks. It has an important foundation. Is the public debt market and the money markets that are been created now. The repo market, where the central bank and commercial banks are trading. Now we are seeing the emergence of an exchange infrastructure, and there's increasing trust in securities markets. It always develops exponentially. You can't build on top of that foundation. You need to let the foundation settle. So we could probably afford to run at a quicker pace, but by and large, we are going down the right path. We need time for trust to be gained. We need to take ownership and take responsibility. And I'm happy when private companies, both foreign and domestic, investing in this future, even if that investment proves to be longer term compared to the option of investing in a developed market. Thank you. I have a question to the governor. Maybe it's like 2 questions packed into one. There was this statement made that, okay, we have the infrastructure, there was this another statement that that infrastructure is insufficient. What is the National Bank doing to promote a healthy infrastructure as one of the regulators of financial markets? Again, there was one more statement. Indeed, lots and lots of cash under the mattresses. Some Sergei named 90 billion, some estimated 40 to 80 to something billion. So who needs to do something? And it's not just cash in a deposit safe. How to bring those assets into the real economy? Now, let me begin unpacking this one by one. The biggest market is the so-called OVDP, the treasuries market. And that is a well-functioning and leading market, not only because it is relatively low risk, but also because it relies on a pretty solid infrastructure. There are other steps that we're currently undertaking together with the Securities Commission is to transfer the functions of central depository to the newly created regulator. Now we've also, under the new law, there is no monopoly for clearing. Now clearing is no longer a monopoly. And now there are several other steps that we are taking in terms of promoting the infrastructure, mostly to implement our memorandum that we've signed with the Securities Commission and with input from our partners at the European Bank for Reconstruction and Development, USAID, and several other partners. And we thank them for their strong input in promoting the market infrastructure in Ukraine. So in terms of our plans to promote the infrastructure, so we as the National Bank, we are talking about the securities market infrastructure with specific reference to financial instruments. By virtue of our mandate, the National Bank of Ukraine is not going to have any role in the infrastructure of commodity markets. We only have a role insofar as financial instruments are concerned. So, which is actually I broadly described, but it's like there's a lot of work behind those brief statements, a lot of work that is going to be look. In terms of timeline, the steps that you highlighted, how long will it take to create that infrastructure realistically? In terms of the transfer of depository functions, it's up to 1 year and will be done because this opens up new opportunities for custodial support for lending operations using treasuries. Yeah, if individuals are allowed to buy treasury bills, then they will be able to pledge them as security or lending on top of classical repo transactions. You can also develop securities lending in treasuries. And the question where to raise financing, well, the size of Ukraine's shadow economy, according to varying estimates, also varies. You're quite right. There are some numbers that we believe to be quite reasonable. It's up to 30% of GDP. Okay, we're talking about the economy. But what about dollars hidden under the mattresses? There's quite an amount, according to Sergei. Is there a realistic estimate? I don't think that there's anyone that could pinpoint a more accurate number than the National Bank of Ukraine. We're not in a position to do that because that is cash outside the formal economy. Yes, we have our own estimations, but what I can say is that they failed to consider the time period until 2010. That according to our estimations, we're talking $35 billion, but it's shared between the dollar and the hryvnia. How to encourage people to take their savings to the banks? No, Ruslan, no. We've been discussing the plans that the Commission is contemplating to facilitate, to simplify its procedures. Now, if a Ukrainian business wanted to raise capital through the stock market, so there is this precedent, the deal with the football clubs deal. What is the Commission contemplating? Will I be able to raise capital in 2 months if I were to print a bond or something? Now, the football club, it took them 18 months, unfortunately, and that's what we are now working on. If we were to talk about specific steps, we have reached an agreement with the audit chamber of Ukraine because prior to that the Commission required that the future issuer provide audited financial statements with certain other representations that auditors were not in the position to include. Now we got that out of the way. Now we are also reforming the Commission from the inside now to simplify this procedure. If, while I'm in office, if we succeed in creating a guide which will script the steps that a business should take to close a deal within 3 months, for instance, okay, be it bonds or equities, maybe even if possible earlier than the time you leave office. It is not in the hands of the securities regulator. Well, and while I'm quite proud of our independent status as a regulator, but we still need to seek concurrence from various ministries whenever we issue policy. Now we have a case. We want to launch remote securities account opening. Now, this has actually been done by the National Bank of Ukraine already, and it's and also to conduct KYC procedures remotely. And we would like to blueprint the NBU's experience, but we are not allowed to do this because the Anti-Money Laundering Authority, the Financial Monitoring Committee, is not willing to grant their concurrence, and it's going back to specific steps. What we want to do is just to reform the Commission from the inside to make it sort of easier to understand, because in many situations the Commission requires the same information via various returns, but then we never even analyze or review that information. Okay, in terms of communication, what to expect? To expect more IPOs out of Ukraine, or in Ukraine rather, because you have first-hand information. What about corporate debt markets? Now, most people who've applied to us, they're not prepared to do their bit to increase their own degree of transparency, to pay their fair share in taxes. Those that are ready to do that, their risk is that they may not succeed in raising capital, because a good issuer is one that doesn't need financing, but those that have enough financing capacity. So why do it? I'll apply for a loan under 379. I don't need to raise equity. I'm now in talks with highly reputable companies about a financing deal, but there's enough liquidity in the economy, but it could be in deficit tomorrow. So we don't know. But if you actually create an instrument for raising capital quickly. So the two remarks that I would like to make. We stand with the Commission in terms of supporting their proposals about developing the IPO market. We had quite an emotional discussion about a future IPO of state-owned banks, which will hopefully be put up for privatization in the near future. But what I would like to share with you something that I was positively impressed by, the recent strategy approved by the government for Privatbank. One of the privatization paths under that one is an IPO. We are moving in that direction together. It's not that it's all completely easy, and we have a tentative agreement with the owner, but remote KYC is actually crucial for both securities and treasuries markets, because those willing to take part in initial offerings and secondary trading, they are not in a position to travel to Ukraine physically to complete their leg of the KYC procedure. And we are working to simplify at the path for those willing to open a securities account with at the Ukrainian bank, for that, to enable them to complete KYC remotely, because there is no compromising on KYC, but to enable KYC remotely is something that we should do. Do I understand correctly that it is that using a mobile app that a Ukrainian citizen will be allowed to open a securities account? It is already possible to do that now. Now, it is just with one qualification. It is possible for banks, but for non-banking financial institutions, there is one case, but it's actually very hard. There's something I would like to add, that the work that we've done with the National Bank and where our relationship is much better. It's a great message for the market. Sergei Butkin, 2 questions. We already touched upon one of those. At the start of this discussion, it's more of a kind of the Ukrainian capital market, if in terms of comparing it with other capital markets. Why is it that Russia and Kazakhstan have a market and Ukraine does not seem to have one? And now new instruments. We touched upon land certificates, and in light of the opening of the land market, it opens up quite some opportunities, not only for agricultural businesses, but other marketplaces. In terms of why those neighboring countries that you name, they have an equity market and Ukraine doesn't have one. And it's because our market has been developing in a top-down fashion. So a certain perfect picture was painted for a perfect market with a perfect infrastructure. It's like in that joke about fish. So it's if somebody doesn't have fish, but the other guy says, you start frying, fish will come. So it's actually all on a conceptual basis. But in those other countries, market has been developing from the bottom up. So there was a proto-security created called the investment voucher. And it was... and at that time, the government issued a very large amount of proto-securities, out of which a securities market was born. So public property was parceled out into small bits and then there was each citizen was given one bit, and then they were bought up by some operators, and then this was followed by the creation of Renaissance Capital and Alpha Capital, and then this is how the the market infrastructure that we know now was created. And then they started agreeing how to trade, what to trade. So it was actually created by market participants. Isn't that the path of all stock exchanges? Yes, de facto. But in our situation, and back in the 1990s, that we were kind of building paper planes, and we thought that those paper planes would fly, and we created an infrastructure without any idea of what it is that we would be trading in. Now, there is this positive, good relationship of indeed a strong degree of cooperation between the National Bank, Ministry of Finance, and the National Securities Regulation to create one security with very large volume, to have millions, not each citizen, but essentially having millions of shareholders without strong concentrations, so that the one holding that paper, at least to avoid initial concentrations, to preclude market makers from forming too early. But it's just, and then we need a story, a good and sensible economic story behind this. If you buy this security, it's either you're going to make money by receiving your deserved dividend, or a foreign investor is going to come in and offer you good money for your security. So the government has a lot in terms of assets. Ukraine has land still owned by the government. As a citizen, it would be good to know that I am entitled to a piece of it that I can sell. Naftogaz, the oil and gas corporation. Why not privatize it? Why not pass special legislation to impose certain restrictions on its corporate governance for the government to hold the golden share in that newly incorporated public company, but then distribute shares in that to the Ukrainian population? That in 18 months' time, the whole market infrastructure created previously will be enabled, and a civilized market will pop up overnight. And Ruslan is going to end up regulating a very sizable market of several $billion. If that market is created, private issues are going to come in, because a private issue has no incentive. They have no basis, no evidence that if they go for it and spend a lot of money and time, but if a benchmark is created, that if they have Naftogaz, the oil and gas corporation, to follow, trading so impressively that if somebody working in the next sector, they could go, okay, I can do the same. I could issue stock and raise capital if I need additional capital. Is there a market of just one security? Is it conceivable? It is conceivable. But if that security is large, in terms of volume, a large issue, widely distributed, and an economic rationale for holding. But if we look at the most developed market, the U.S. market, at the S&P 500, it's up to 5,000 companies listed. It's still a market of a pretty small number of issues. In Australia, where I live, half the market is 7 corporations, one of the largest stock markets. We can create. So it's not a valid argument that one security, one issue is not enough. It is enough initially, but the companies that you name, speaking of the National Oil and Gas Company or land, it's in the hands of the Cabinet of Ministers and the Ukrainian Parliament that should allow it, and the State Property Fund. The State Property Fund should initiate this. There needs to be somebody championing this, somebody who will come forward publicly and make a strong statement why we're doing this. And Ruslan will go, yes, indeed, we have the infrastructure to accommodate that. If we do this, the nation will benefit. We'll have high trading volume, we will have fees paid for registration. I could go on for hours and hours and hours, but in this particular case, this is indeed a genuine path to raising capital. Then the first step should be taken by the government, and then private capital will follow. What about the land market? It's not only land owned by the government, but this will provide an important benchmark for those holding those land parcels. I've talked to people leasing land. Yeah, there is a market, but it is very minuscule. Given the size of Ukraine from east to west, it is not a representative sample, but those that I spoke with, that when large landowners who lease land from tens of thousands of landowners, and they go, and then they start asking themselves the question: how would I sell my parcel, my land plot? It's a very small proportion of those. They don't know how much their land is worth. They need a benchmark in order to derive what their land is worth from that benchmark. So otherwise, the government should take the first step. So the government is the chief architect, and it's supposed to take the first step. Now, a follow-up question. Now, the Securities Commission has signed a memorandum under which a new exchange is going to be created. A question to Sergei: does Ukraine need another exchange? What would be the added value to a market participant, not to the regulator that signed it? I don't really know. But if you were to ask me to share my view on this, I would probably try and put it in very simple terms. Look, how many do we have currently? 5 or 10 exchanges? 3. Okay, 3. There is a reason why they're not working. Nothing to trade in, and probably, maybe it's jinxed. I don't know. I don't know what's wrong with it. Maybe it's cursed. But I would rather create one security that would demand a new exchange than create an exchange waiting for something to trade in. Unless we have a very solid concept how we would do both things in parallel, as we create a tradable instrument and a platform, an exchange that is arguably better than the ones that exist currently. Well, I wanted this outside perspective because many people have heard about this as something that's coming up now. We have 2 Sergeys sitting side by side. So with the 2 Sergeys, we are wearing these checkered suits, both of us. Now, no, you are working in the non-banking financial sector. What is some of the benefits that your sector has to offer? That in Europe, up to 50% is the share of it in debt financing. Why is Ukraine so small? This is actually quite a popular financing model. And if we are focused on SME financing, this is a huge market with great prospects. What are some of the benefits compared to banks? It is a lot more agile and fast. If we're working with a business, it's always an individual path, an individual story. And it's a type of investment, either debt or a loan or something. But looking at our results, we have a very cool portfolio. Our NPL rate is less than 5%. NPL is non-performing loans. Those that are not a single default. Now, it's all owing to our risk management, that indeed applying bespoke processes and tailored approaches to both origination and disbursement. So we have over 2 million sole proprietorships. Ukraine has one of the highest proportions of sole proprietorships per 10,000 population. It's some 70 sole proprietorships per 10,000. It is a very high proportion, and something to work with, but they are thirsty for investment instruments. We have lots of cases of investment in SMEs, and this would provide an incentive for them to operate in the formal economy in order to be eligible as an investment opportunity. And if we were to look at it from an investor's perspective, what we need from the regulator's perspective is a powerful communications strategy. We don't have competition, which is good and cool, but on the other hand, okay, in the short term, but in the long term, it means that there is no influx of customers, because the customers by and large don't know about any of that stuff, shares and bonds and everything. We need to raise awareness, and who is supposed to do that? Is that the regulator's job too? But I think that should be initiated from both sides. It's a story of collaboration, of communication, and yes, in the professional environment it is easier to disseminate information, but you need to work together with the regulator. But from the investor's perspective, it's a lengthy process of raising capital using stock instruments. It's something that acts as a disincentive, but there are funds who quickly sell their issues but if they sell an issue and then it takes them another six months to create the next issue, and then we have investors with cash taken from under their mattresses, and then they're ready to invest and then pay taxes and all that. But they can't invest those funds. And then they see that cash flowing to foreign markets, and they are happy to oblige. So what would you do to help to retain this cash? Simple procedures, clear accountabilities for investment managers, and to lower entry barriers, and to enable non-banking financial institutions to raise investments from the retail market. But the manager should have some skin in the game. Now, we've got Timur connecting online. And the question more, I understand that your business, you are very active in brokerage, but this panel is about raising investment. What do you think about the prospects that Ukrainian businesses might have to raise investments? What is lacking? Are those prospects even there? But let's be honest. Now, the good news is that our investor base keeps consistently growing. The treasuries market has laid the initial foundations, and Ukrainians actively investing in foreign markets. They are earning useful experience, and then you approach them about a Ukrainian company tapping the market. They will have already earned quite an understanding of how all this works, and they're not only looking at foreign investment stories, but at local placements as well. And it's important to hold on to initial investor trust, because to create procedures to raise capital and then to allow access to everyone to an exchange, that may not be the right path either. Yeah, it's certainly important to create viable procedures, but it's not that we need to create a market for all businesses. Entry barriers must exist. In the US, they think that if a company wants to be public, the price tag is $2 million additionally that you spend, American price tags. Yeah. You spend on additional disclosures, on having your accounts audited, that sort of thing. Many will prefer to stay private, and that it is a conscious choice to keep the bar high enough. The message is that you've got to be big enough, sustainable enough to enable uneducated individual investors to invest in you. There need to be instruments that to be potentially lucrative for the market, and we need, and it takes time to create this chemistry, to create this trust. But either the government should take a really prominent role, but the stock market is always for big business, small, medium-sized businesses. They could raise financing through high-yield bonds, and that is also quite a viable path. And those markets are growing very rapidly in Russia and in Kazakhstan, and we are taking steps in Ukraine too. We need to eliminate arbitrage operations to actually on things like and to eliminate tax disadvantages. And this is something that many countries have tripped over. Ukraine is more or less balanced from that perspective. We should create incentives to encourage more participants to enter the stock markets. But it's premiums that could be offered to incentivize market growth. But this market has quite good prospects. But we need to pursue a measured and consistent approach to create a core market and create benchmarks for people to see that, yes, you can do it here, but at the same time, we don't want to see 5 companies go public, of which 3 then file for bankruptcy. This will kill the idea. So the idea that Sergei Budkin articulated about government-sponsored or promoted IPO. How do you think private investors would be excited about investing in a certain segment? Indeed, it's what Sergei expressed. It actually sounds very valid from my perspective. Theoretically, it is possible that maybe big business can try and create a market without using the government, but it's more difficult. So, in Kazakhstan, the domestic stock market was very much spurned on by the government. But I'm actually ready to subscribe to Sergei's words. Now, we only have 10 minutes left, and I would like to ask all panelists to keep their contributions brief. How to make people pull cash from under their mattresses and invest it? And what about other methods of simplification? Now we still have restrictions on investing large amounts in foreign markets. So how to achieve this? Now, we are seeing quite a relaxation in terms of reducing capital restrictions now. Dividends are allowed to be expatriated in this country, and investment can be made. Now we have some restrictions for individuals. 50,000, 100, 2,000, that limit was increased. And I think that there is this confident progress that we've recently also revoked certain restrictions in the derivatives market, and sort of certain. It's actually, there's a roadmap in the law. So I don't think there are many complaints about this particular area of regulation, and a really viable instrument to encourage people to invest is the non-banking financial institutions segment, and it's something that Mr. Sergei Wozniak spoke about. We are now upgrading legislation. The previous, then again, the laws that are currently in effect are sort of something like 20 years old. We have quite strong buy-in on the part of industry associations contributing to this discussion, but the market is indeed a more dynamic one, and it offers a fast track for clients. But because it is smaller in terms of volume, in a good way, so there are banks present here can say that we also operate in the retail banking market, yes, but their decision-making cycles are longer at a bank. Well, I'm just stating the obvious. I don't want to offend anyone. Maybe there was maybe a year or 2 years before the pandemic where the non-banking financial institutions would bring about the demise of the banking sector. Probably not anytime soon. But we could employ instruments used by the non-banking financial sector, and also by implementing instruments in the market that private investors understand. And it is, let me reiterate this point, it's not supposed to be, those instruments are not supposed to be plain vanilla or anything, but they are supposed to be those instruments that investors understand. But I do not agree that we should go back to the early 1990s and parcel out those government state monopolies into small bits and privatize them. That was the question to the regulators. So one important instrument, for investor protection. So how is that process evolving? So what to expect for external market participants who are actually quite concerned, knowing the history of hostile raider takeovers, and it's actually the flip side of the coin. Why is it now so difficult? Because when those securities were issued, and in many situations securities were issued to steal investors' cash, and it's the law governing the institutional capacity of this. Look, I was an intern at SEC, and SEC is, people are more scared of the SEC in the U.S. than the district attorney's office. Now, it's in our case, it's in our case, people are afraid of coming to see us. Yeah, but it's okay. Why do it? Why face all this trouble? But it should be feared by crooks, by those committing fraud. But for the Commission to defend issuers, it needs to embrace those new powers that similar to the remit of the National Bank of Ukraine. Now, if the Commission wishes to revoke a license, the licensee has the right to take it to court, and and then win in court and continue committing fraud. So the Commission does not have those powers. Now, another important thing that we raised is that level of pay and competencies, because large powers is a source of of large temptation. So if traffic police, if they're not paid good salaries, they will take bribes. Yes, but just to avoid this, but this could become a big problem. That's why we are now in dialogue with Parliament, and that is also important, because you cannot empower us to a greater degree without also addressing the level of pay. Yeah, but the Commission has a problem. A lot of people working, 500 people being paid very low salaries, and we are now working to do something about it and to improve things. But in order to do it indeed to a high standard, well, I'm not talking about internationally competitive salary rates, but competitive by Ukrainian standards. So there are those some of those penalties may be a little too high for Ukraine, but I think that penalties may need to be reconciled with the Ukrainian reality. But it's like can Ukrainian companies raise capital? Now, we've spoken hypothetically about the state selling assets, but what about private equity investments? Yeah, you grow and become an MHP, a colonel, someone eligible to tap foreign markets in Warsaw and London and Frankfurt, neighboring countries, and most countries, and both to the north and to the south of Ukraine, and those that Timur represents, shown very clearly. Then if you large and economically viable with a solid business model, then if you're a big enough issuer, you can succeed in raising capital from the exchange. But I quite agree with Timur, and if you are not mature enough, you shouldn't pursue it prematurely. And it's like, if I can share a story very briefly, because we're running out of time now. It's just that it's a story. Once when I worked for a bank, I had the street vendor coming to me and said, I sell flowers. I have one booth. I've opened a second one, and then I'm going to launch a third one, and then I'll come to see about an IPO transaction. Sergei Pozniak, a question to you. You're not only managing your assets, but you're raising capital from other sources. But what could somebody follow in your footsteps, and your company, can it potentially be an IPO target, or you're too small for it? Well, potentially it could be. I would like to agree with the previous speakers that I quite agree with Cyril that a sustainable financial system is made up of a solid banking sector and a non-banking financial sector, equal in size. And I quite agree with Ruslan's point that indeed the Securities Commission should have sufficient powers to get the market, to rid the market of fraudsters. And I quite agree with Sergei that businesses have a chance of becoming potentially eligible as investment opportunities using stock market instruments. In terms of scaling up, our experience, even a small business could use securities and stock market instruments if the fund is investing in really solid instruments. And this is a way of financing SMEs, and those SMEs are being brought up to the market that they begin to pursue a path of operating in the formal economy, growing, and eventually growing mature enough to raise financing from an exchange. Timur, your experience with IPOs in New York, how long have IPO transactions taken? How much have you had to invest? And now retail Ukrainian investors are beginning to buy foreign equities. Are you planning to offer your equities for Ukrainian investors? Well, but let me take the last question. The Ukrainian stock market now has a derivative with our equities underlying it, because we are not allowed to trade in foreign equities electronically. While they may be admitted, but we created a derivative to enable those trades. And we're always interested in proposing an instrument. Whenever a client begins to work with a brokerage house, then you begin to develop your relationship and gain trust. And we have a lot of shareholders among our clients, and it's something that helped develop our business to build a long-term relationship. This is one of the big benefits of living a public life. In terms of price, we started down this path a little too prematurely. We actually started down this path when we had sales of $20 million per year. It was clearly very small. Now our top line is measured in hundreds of millions of dollars. Maybe a year ago it would have been the right time to start, but it took us some 2.5 years. It was a lengthy path, and it was if we had been a larger ticket, we could have covered this in 8 or 9 months. If you are internationally audited and signed by one of the big four, and you are in pretty good shape, raising 100, 200 million. In the US market, it's next to impossible to contract a deal smaller than 200 million. It's only if you are some very unique, emerging investment story in biotech in the US. But then again, various banks are available to lead your deal. The SEC has looked at not as much at your financials, but at your record in terms of integrity and honesty. We tapped the market when we were very small. We would have covered the same path much faster, but how much we laid down, $700,000 to $800,000 on top of what we had borne before going public, and that is cash that actually you have to keep paying this money even if you're not raising capital. So this should be an amount that is not material to your total assets. But if you are making $70 million per quarter, and then or 700, then it is a worthwhile investment. Now, for instance, when buying assets, now we can settle in our stock. We can settle deals using our stock in the US. We've had deals closed. We are increasing the loyalty of our clients very substantially, but it is also quite a burden, a compliance burden in terms of reporting requirements. It's those that direct outlays, the money that you spend on your auditors, but you need to rely on a strong team, and a public life is a long-term commitment that you will continue raising capital, that you will continue using your own stock as currency, and then when you actually learn to do it, then yeah, it may be more expensive, but it's quite an exciting story. Our panel is now drawing to close. It's good that the regulators are ready to work together, and those statements made, they've actually shown that there is a systemic improvement in this entire infrastructure. I'm quite inspired by the position taken by the private sector, by the investment and banking sector, financial sector, that markets actually developing. This is a good sign that there's new instruments created, and we are now entering a high growth phase. Thank you for your very cool insights. Thank you.